The stock market sell-off is gaining momentum, and that's concerning many stock market investors. Of course, if you're a long-term investor with a very long time horizon, these sell-offs can be opportunities to buy excellent stocks at bargain prices. Is Micron Technology one of those bargain stocks? I'm going to answer that question in this video. By looking at Micron Technology's revenue growth over the last few years, looking at its cash flow from operations to sales figures, looking at the returns on investor capital. I'm going to weigh all of that against its valuation, measuring the company on a forward price to earnings basis, and looking at my discounted cash flow calculation for its intrinsic value per share, which I updated today, March 13th, 2025, with new free cash flow forecasts for Micron Technology updated today. So I'll share all of that with you and my recommendation on the rating of this stock, whether it's a buy, hold, or sell. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So one thing I see when I evaluate Micron Technology's revenue growth over the previous decade is volatility. And that's to be expected for a semiconductor company. Micron Technology sells DRAM technology and SSD technology, which is memory and storage for electronic devices like smartphones and tablets. Micron Technology is also participating in the expansion in the data centers, optimized for artificial intelligence, working with NVIDIA in this space. So its prospects are robust over the next few years, and we're already starting to see that. The company reported 84% revenue growth in the most recent quarter. Micron Technology telling investors that it's also benefiting as consumer electronics are being embedded with more technology because consumers are willing to pay the higher price for devices with more features, with more computing power, with more AI. And I've seen that from other big companies in that category, including Qualcomm, which said similar things about people trading up to more expensive smartphones, and Apple, which said another similar thing, that people are trading up for more premium iPhones. So several sources, including Micron, are informing investors that consumers are paying up for more technology in their devices, including smartphones, tablets, and laptops and personal computers. And of course, we've all heard of the booming spending in the data centers optimized for AI. All of that is working well for Micron Technology. We're already starting to see that big rebound in revenue for Micron right now. And so that's fueling a rebound in the company's cash flow from operations to sales up to 35% in the most recent trailing 12-month period. And I wouldn't be surprised if over the next 12 to 24 months, this figure continues rising back above towards previous peaks where Micron reported surges in these numbers. And of course, Micron Technology is a domestic producer of semiconductors, which the current administration in the United States is really trying to push for companies that are producing semiconductors in the United States. Micron has massive facilities in the United States. Of course, it also has facilities overseas in Taiwan, but it's investing in bringing back production to the United States. It has facilities under production, building out in the United States, capitalizing on the semiconductor benefits that the previous administration initiated, the Chip Production Act. Micron is spending billions of dollars adding new facilities, which will come online over the next few years. And so it could be getting in the good graces of the present administration, which is placing tariffs on what it seems like every country and everything. New tariffs are coming out daily. It's hard to keep track of all the new tariffs that are coming out. If you zoom out the big picture, you can see from the current administration, President Donald Trump does not want companies outsourcing manufacturing and outsourcing jobs outside of the United States. And so Micron Technology is in a good position here, being one of the few domestic semiconductor companies that does design and manufacturing in the United States, the other one being Intel. So Micron's returns on invested capital are also rebounding quickly up to 7%. And again, just like with the cash flow from operations, given the markets that Micron operates in and the rebound and the acceleration in those markets, I wouldn't be surprised if its ROIC continues recovering and recovers back to those peak levels around 2018, where it delivered these numbers above 30%. I wouldn't be surprised if over the next 12 to 36 months, if Micron technology hits these levels over those next few years. And as I highlighted in the introduction of the video, I updated my discounted cash flow valuation for Micron stock. I increased the intrinsic value per share update as a result of increases in the free cash flow expected between the years 2029 and 2035. Micron's expected increase in free cash flow between those years. I have the company's free cash flow growing from 7.68 billion in 2029 all the way up to 22 billion by 2035. That's a result of growth in the markets that it operates and growth in market share for Micron technology. The company's new manufacturing facilities are coming online sometime towards the end of the decade, around 2029 or 2030. So once those manufacturing facilities come online, its ability to increase production capacity, as well as being able to increase production capacity with the latest generation technology and being in the United States, the company should be able to increase its free cash flow meaningfully over those years. And so my previous intrinsic value per share had the stock around $120, $130. I've upgraded that to $139 per share intrinsic value. The current market price is $94.88. So there's considerable upside as the market price approaches my intrinsic value per share calculation. And then on top of that, investors can earn the regular required return on Micron stock, which is the cost of equity at 11.58%. So there's multiple sources of expected return for Micron over these next few months and few years as the company benefits from the growth of the end markets it participates in. Furthermore, I looked at Micron on a forward price to earnings basis, and it looks relatively cheap looking at it according to the forward PE at just 8.5. So there are risks, of course, in investing in Micron technology stock, especially amid all of this market volatility. But during this chaos, you could find an opportunity to get Micron technology stock at an even lower price if you're uncomfortable paying the current price, which I feel is undervalued as it is. But you might still feel uncomfortable buying stocks during this market volatility, which is understandable. You shouldn't invest money if you're not feeling comfortable making those investments. For me, these are the times I feel most comfortable making investments, is when everyone else is afraid of making investments. I feel afraid of making investments when everybody is extremely bullish and everything is overvalued and everything is going up. That's when I get nervous. That's when I feel like, oh my goodness, people are too optimistic. There isn't enough concern in the market. People aren't being cautious enough. People aren't being prudent enough with their investments. They're just throwing their money at everything and anything, and the valuations are too high. That's when I get nervous, right? During market volatility, during these sell-offs is when I feel more comfortable. When I feel like, okay, finally the stock market is being more cautious. Finally, investors are being more prudent and prices are coming down, and I can get great businesses at bargain prices. And I feel like Micron Technology is one of those businesses that's selling at a bargain price. So to update my recommendation, I do feel Micron Technology stock is a buy, and I updated that on March 13th, 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.